right, good morning. It is 7:51 a.m. Central Time on Wednesday, October 25th, and let's jump right into the trade planning exercise in Vulcan Trader. So, today I think there is potential for some directional movement. On Tuesday, our expectation was for a relatively balanced and two-sided trading session, but today I think there is some potential for a directional move, whether it be a breakdown below the 42.36 to 46 support or a breakout above Tuesday's high. Now, our intermediate term bias is still bearish and our short term bias is still neutral bearish, so we are still going to favor the short side and we will need to see clear signs of initiative buying if the market is going to head higher in any significant way. Now, if the market is in a weaker state and we're going to get a breakdown below 42.36 to 46, then ideally I want to see ES holding below 42.67.5 to 77.5, which is the pre-market resistance zone. So that's going to be one potential trade setup this morning, and in this case we're going to target a move down towards yesterday's low. So the high probability will leave at 46, but the final target we're going to set to the recent low at 42.13 quarter. So that's going to be our final, and I think if the market is selling off on clear signs of initiative selling, then the market doesn't have to stop at 42.13 quarter, and we could actually end up testing the 41.98 quarter to 42.08 quarter area and potentially 41.8475 to 91.75. So on the downside, 42.13 quarter is not a unrealistic target. And in real time, I may even change the high probability target from 46 to perhaps the 21 quarter zone. So that's something I'll have to assess in the moment. And based on this, we can take an entry at 69 and still get 3R out of that trade. Now, this isn't an automatic trade, but it is a pretty likely trade to be triggered. As long as we're not seeing clear signs of initiative buying, I think pre-market resistance would be a good spot to look for a short, and a breakout above it would be a sign of intraday strength. And because today there is potential for directionality, I think it makes sense to actually be a little more careful at the 42.80 half to 90 half initial resistance zone. Because if the market is going to put in a downside move, then ideally I want to see it holding below the overnight high and the 42.67 half to 77 half zone. And a break above it is a signal of strength. So if in real time the market's breaking out above the overnight high and above pre-market resistance on clear signs of initiative buying, then I need to be careful at 42.80 half to 90 half, because in that situation the market may be trying to put in a directional move to the upside. Now, 42.80 half to 90 half is the intraday bias changing zone, so it makes sense to have a short setup prepared at that zone in the event that we are seeing a lack of strength as the market pushes up there. So initial resistance is a potential short, but I will need to assess the real-time situation just to make sure that we're not going up on significant upside momentum. And again, if the market is going to head lower in any significant way, I don't want it going all the way back up into 42.80 half to 90 half. And then above that, we have the intraday bias confirming zone at 95 quarter to 43.05 quarter. Again, it's a valid spot for sellers to be active, but if the market is heading up on trend up type internals, then I'd rather not just take a blind short at that bias confirming zone. And in that situation, there would be potential for the market to head up into 43.2075 to 30.75. Now that is where the market would be exhausting the range potential. So if that zone is being tested earlier in the day prior to 1:30 p.m. Central Time, then that would still be a good spot to look for a short. On the downside, I am not really that interested in buying the market unless we are seeing a bullish disconnect on the advanced decline, or the NYC tick is holding above zero, and this is the first push down into initial support. So it would take a very specific intraday situation for me to take a long at 42.36 to 46 because longs at the moment are counter to the intermediate and the short-term directional bias. So even though we can look at what a long setup at initial support may look like within Vulcan Trader, I don't think it makes sense to necessarily buy that zone unless there are very clear signs of intraday bullishness. So if the tick is holding above zero, there's a bullish disconnect on the advanced decline, NASDAQ is showing strength, okay, then maybe. But again, our directional bias favors the downside, so I need to be more defensive on taking longs. So not really super interested in buying 42.36 to 46, but in the event that the market gets exhausted into the stronger areas of support at 41.98 quarter to 42.08 quarter, and especially 41.8475 to 91.75, I think those are good spots that still have potential to attract responsive buyers. So those would make for pretty decent buying opportunities, especially 41.8475 to 91.75. Now, 41.98 quarter to 42.08 quarter is also a strong zone, but the market would not be exhausting the range potential until it reaches towards the back of that zone. So within 41.98 quarter to 42.08 quarter, I think it makes sense to take the entry towards the back of that zone. And in this situation, our final target should also be the 42.36 to 46 area. So based on that, we can see that 42.05 half would provide us with 3R. And even in this case, I think we can make the final target 42.36 right here. So 41.91 half would give us 3R from the 41.8475 to 91.75 zone. One other thing I'm going to do here is structure the trade as more of a daisy chain where my stop on the first zone is behind the entry at the next zone. So we can see that 4200.75 with a stop at 91 quarter still gives us 3R. And that way, if the market doesn't stop exactly at the 41.98 quarter area, I still have an extra safety net of that wider stop, which is at the next larger time frame zone. And in the event that this stop gets hit, I will already be long again from the 41.91 half price. So this would be a very defensive way to take that trade. And depending on how the market approaches 41.98 quarter, 42.08 quarter, it may make sense to jump in at 42.05 half, but the safer approach is going to be at 4200.75 and 41.91 half. So that is how we are shaping up heading into the open. On the downside, the high confidence longs are going to be at 41.91 half and 4200.75, and this is a daisy chained sequence. And on the upside, I think if the short is going to work, it'll work from the pre-market resistance zone, and in the event that the market starts heading higher on some decent upside momentum, then I think we're going to have to be a bit more cautious. One other thing I will do is create a setup on the short side based on the overnight high. So instead of leaning just on the pre-market resistance, which is 42.67 half to 77 half, I think if the market is in a very weak state, then it may not even take out the overnight high. So I can create an additional trade setup based on the overnight high as the invalidation point. So with my stop above 42.73 half, and again, we are going to make the final target 42.13 quarter, and based on that, I can short as early as 42.65 quarter and still get 3R into the recent lows. So this would only make sense if in real time we were seeing some clear signs of sellers in control or just a clear lack of momentum. So I'd have to see something in real time that would warrant the more aggressive entry at 42.65 quarter. But again, if the market is going to head lower in any notable way, then we should not really take out even the overnight high. So if in real time we're seeing the tick holding below zero or a sequence of wide range downside bars in one of the other markets, so we'd have to see something bearish in the moment to warrant that more aggressive entry, but it's good to be prepared for that option as well. So heading into the open, we have a potential short at 42.65 quarter. The more conservative one would be 42.69. And again, we're still going to assess the real-time situation before we consider taking these trades. 42.82 quarter is a possible short, but again, my thesis is that if the market's weak, we shouldn't get there. So I'm not super interested in that one. 42.99 may be a short if the market's exhausted into it and we are seeing a lack of upside momentum. 43.25 is a higher confidence short purely based on location and range exhaustion. So the trades where we can have resting orders would be 43.25 on the upside and 4275 and 41.91.5 on the downside. So that wraps up our trade planning exercise for Wednesday, October 25th. It's 8:05 a.m. Central Time at the moment, and now we still have 25 minutes, which is more than enough time to get into a peak execution mental state. And with all the preparation that's already done, the execution in real time is going to be much easier and simpler as well. So I hope you found this interesting and valuable to your trading. And it's not really about the trade setups that play out just today. It's more about the process of actually preparing for the session, which is a repeatable process that you can follow along with every day on E-mini Player, especially if you are using Vulcan Trader for execution. So that's going to be a wrap. Good trading, and I'll catch you in the next one.